NVIDIA has once again delivered a powerful earnings report, reinforcing the strength of the artificial intelligence infrastructure boom. But the bigger question for investors is this: which stocks could benefit next from NVIDIA's explosive AI demand? In this video, we'll look at 3 stocks that stand out after NVIDIA's latest earnings report: Sandisk, Micron Technology, and Marvell Technology. NVIDIA reported approximately $96.22 billion in quarterly revenue, while data center revenue reached around $89 billion, representing growth of more than 100% year over year. NVIDIA also provided revenue guidance of approximately $108 billion for the next quarter. The message is clear: demand for AI computing infrastructure remains extremely strong. NVIDIA is more than just a semiconductor company. Its results provide investors with a window into the entire AI infrastructure ecosystem. When NVIDIA sells more GPUs and AI systems, data centers need more memory, storage, networking equipment, power infrastructure, and servers. That creates opportunities for companies throughout the supply chain. The first stock on our list is Sandisk, ticker Sndk. Sandisk is one of the most interesting ways to play the growing storage requirements of AI data centers. Artificial intelligence workloads generate enormous amounts of data, and that data needs to be stored, accessed, and processed efficiently. As AI infrastructure expands, demand for high-performance storage could continue increasing. The important factor for Sandisk is the connection between AI growth and storage demand. Modern AI systems require massive data sets for training and inference. As hyperscalers and data centers continue expanding their AI infrastructure, storage becomes increasingly important. That gives Sandisk potential exposure to a second-order effect of NVIDIA's growth. However, investors should not ignore the risks. Memory and storage markets can be highly cyclical, and pricing can change quickly depending on supply and demand. Sandisk's stock can also experience significant volatility after strong rallies. So while the AI opportunity is attractive, investors should avoid assuming that recent momentum will continue indefinitely. The second stock is Micron Technology, ticker MU. Micron is one of the most important memory semiconductor companies in the world and has significant exposure to high bandwidth memory, or HBM. HBM is becoming increasingly important because advanced AI accelerators require extremely fast memory to process massive amounts of data. The AI boom is creating a different type of semiconductor shortage compared with previous cycles. It is not only about GPUs. AI accelerators also require advanced memory. As NVIDIA and other chip companies deploy increasingly powerful AI processors, the demand for HBM could remain strong. This potentially gives Micron an important role in the AI infrastructure expansion. The biggest concern with Micron is valuation and the cyclical nature of the memory business. Memory prices can rise rapidly when demand is strong, but the industry can also experience oversupply. Investors therefore need to watch HBM demand, pricing trends, capital expenditure, and Micron's future earnings guidance very closely. The third stock is Marvell Technology, ticker Mrvl. Marvell gives investors exposure to another critical part of the AI infrastructure story: networking and connectivity. AI data centers require enormous amounts of data to move between GPUs, CPUs, memory, and other systems. Faster AI computing, therefore, creates a need for faster and more efficient networking infrastructure. As AI clusters become larger, networking becomes increasingly important. It is not enough to have powerful GPUs sitting inside a data center. Those GPUs need to communicate with each other and with other components at extremely high speeds. Marvell's technology positions the company to benefit from this growing demand for high-speed connectivity and customized semiconductor solutions. Marvell still faces significant competition in the semiconductor and networking markets. Its business also depends heavily on continued data center investment. If hyperscalers reduce capital expenditures or AI infrastructure spending slows, Marvell could experience pressure. So the AI opportunity is significant, but the stock remains sensitive to expectations. So, how would I rank these 3 stocks after NVIDIA's earnings? Number 1, Sandisk. Number 2, Micron Technology. Number 3, Marvell Technology. Sandisk offers attractive exposure to AI-driven storage demand. Micron provides exposure to the rapidly growing HBM market, and Marvell offers exposure to AI networking and connectivity. The bigger takeaway is that NVIDIA's success is creating opportunities far beyond NVIDIA itself. The AI ecosystem requires GPUs, memory, storage, networking, servers, cooling, electricity, and data center infrastructure. That means investors looking for the next AI winners should consider the companies supplying the infrastructure behind the AI revolution. NVIDIA's latest earnings report once again demonstrated that AI infrastructure spending remains extremely powerful. Sndk, MU, and Mrvl are three stocks that could benefit from different parts of that spending cycle. But these are not risk-free investments. Valuation, earnings growth, competition, and AI capital spending expectations will ultimately determine whether these stocks can continue outperforming.